I'm part of the portfolio team here at NewDeal Invest. I am sort of the coordinator of the smart portfolio we have on eToro called NDI-FutureTech, which is now among the most popular and best performing partner portfolios on the platform. We are nearing 1,000 copiers, so check out the link in the portfolio description if you are interested. And just before we get started, a short disclosure. What we discuss today should not be considered investment advice. Please always invest at your own risk. Great. So, Mads, can you share a bit on what's in store for us for next year on NewDeal Invest or NDI-FutureTech?
Yeah, certainly. That's what we're going to be discussing, sort of how we got here and how we look at next year. What we're going to be putting into our portfolio or be looking to put into our portfolio. I just wanted to just highlight the front page here on our NewDeal Invest portfolio. We have our wall here where you can find any videos we have, and you can find our analysis on the various stocks from our portfolio. And lots of good stuff here with more deep analysis on the stocks in our portfolio. And just to let's look at the performance here, up 64% since inception. Now this 64% since inception. And as you can see on the chart, it's been really good the past months here. The election of Trump really just turned our portfolio into a rocket ship. And it's the small tech stocks that had a revival, and I'll get a lot more back to that. So if we see here on the top, the most weighted stocks or the heavyweight stocks in our portfolio are Upstart, Hims&Hers. Yeah, Tesla has been pounding away, but Lemonade, SoFi. So many of the smaller stocks has been really good. I'll get back to that. And then we see that some of the software stocks has been performing well as quite well as well. Confluent, Snowflake been performing well, but actually most has really been performing well. Some has not been performing so good, and I'll get back to that as well. So let's look at the sectors over the past period here. Let's look at the last 3 months here. We have the SOX here. No, here this chart here is the Nasdaq, and here we have the SOX, which is a semiconductor index, which has been performing poor compared to the index the last 3 months. And if we zoom out to 6 months, it's the same story. Tech or semiconductor stocks has been weak for the past period. Then we have here iBuy, which is e-commerce index, which has been quite well. And then even better has been the cloud stocks. And they've made a comeback here since the Trump election and lately here. And I think what's driving this is that there is a lot of uncertainty with Trump coming in, and the U.S.-China relation. Some of the big stocks in the SOX, they have quite a lot of revenue in China, and China is a part of the value chain as well. So semis there's a little bit uncertainty about them, about Trump coming into office and what they will do with trade with China. So they've been weak, and instead the market has had some flows back into software stocks, which has performed really well. If we zoom out on year to date, we can see that software stocks here has been really weak during the spring, and that was because of the story about whether AI was a tailwind to software stocks, or we would just go to ChatGPT and have them have it create something or something new. So always these sort of stories in the market that is bearing a trend or bearing the flows one way or the other. And coming back to the best performing thing here, it's our Danish fund, which has really performed well as well. PMI NDI, our public listed UCITS fund. And the story here is the small companies that I showed you before, Lemonade, Upstart. They've been really pounded for a long time, and now we had Trump back in office, they really went on a tear due to expectations of more tech-friendly environment in the United States. And I find that this Bessemer Venture Partners Cloud Index is sort of the best proxy for small tech companies if you want to have something to look at for the long run. And Bessemer Venture Partners Cloud Index is here. It's the blue one here, and you see the overperformance long term, but you also see that they really took a deep plunge in 2022. So if we try to put it on a 3-year time frame here, we'll see that the overperforming Bessemer Venture Partners Index has been underperforming the Dow Jones and S&P 500 and Nasdaq for the last 3 years. And so the last rise here we had in the small stocks in our portfolio, I feel is just a reversion to the mean of the very sort of young tech stocks. They were pronounced shitcoins in 2022, and everybody just wanted to sell them because they didn't make any money. And there's quite a good reason for that. I wrote about it in our blog a couple of weeks ago, so look it up either on the eToro wall or on our webpage at NewDeal Invest, because bubbles do something special with them, and it's actually better for the environment right now. Is better for these small companies. So I actually expect reversal to the mean. So I expect the smaller companies to catch up with the indices and actually just continue the overperformance that we've seen here in the smaller stocks. And a way to sort of look at a really long about this is to take Amazon on a long time frame. And I just need to here, if we take gross profit for Amazon and then compare to historical price, and then I need to do a logarithmic here for it to be more easy to see. So what we see here is that gross profit and share price of Amazon actually just sort of has a good correlation here, and it really makes sense. Amazon invests all the money they earn, so we can't look at bottom line metrics because that doesn't make sense for a company that just reinvests everything it earns. So gross profit is a really good metric for many tech stocks to sort of follow their trajectory, and we see a good correlation between the share price and the gross profit, the blue line here, and then it dips in 2022, and that's actually what happened for all tech stocks, that suddenly they were valued way cheaper compared to gross profit. So if we zoom back on Amazon and look at what happened in 2009, we see exactly the same pattern here, the same correlation here, and then a sharp decline in price compared to gross profit. And the picture here will sort of be the same. We could try look at C Limited and then see what the image will be like here. Yeah, I need to. Yeah. So here we get kind of the same picture. We get this picture that there is a correlation between gross profit and the share price, and then the share price just plummets while the gross profit continues up. So we're seeing a reversion to the mean now, where I would expect sort of the long-term correlation to get back to where it was before. So I think the shitcoins of 2022, they're just catching up, just like they did in 2009, 10, 11, and 2002, 3, 4. Yeah. So if we go over and then look at where we're going to turn our portfolio once we rebalance now, for first quarter, we're going to be rebalancing somewhat into this year, which has been trading weak. The semis, I think they're very attractive. Some of the semis has been hurt by the weakness in industry and auto sector, and that's a cyclical thing, and it's going to get back to normal. Customers are going to eat through their inventories, and then we're going to see a ramp up in demand for sensors and intelligent sensors, and power management chips for industry and auto. And then we're going to see the tailwind from robotics, and now we have accelerated compute. We can do a lot more with advanced sensors. We can do a lot more with data. So we're going to see a ramp in that. In my opinion, it's going to be the next wave of AI. So we are going to be looking for some picks in the chip sector which hasn't come back yet. Then we're going to be looking for a leading edge. Leading edge is it's going towards some new technologies. We're not going to do so much on making the nodes smaller. We're going for 3 nanometers, and then we're going for 2 nanometers. But that way of making chips more powerful is going to have a harder time. So we're going to see some technologies where we're going to have more layers in the chips and gate-all-around, which will help some other companies, and we're going to be looking for that development. And then just data center build out is just really firing on all cylinders. We have we have Marvell, which I think is very interesting. We need to discuss it and look more over it, but Marvell could be an ad. They are really Marvell and Broadcom. They are big in the chips that are moving data around within data centers and to and from data centers. And then they are the 2 companies that big tech are using for custom chip for the ASIC chips production, and that's going to help them forward. So I've said this a couple of times that Marvell and Broadcom might be the obvious competitors to NVIDIA on the GPU side, on the XPU side, where they're going to produce chips for big tech that will compete for some of the workloads with NVIDIA's chips. So we're definitely going to keep Broadcom, and Marvell would be an ad. But there are lots of companies that are exposed to this moving data around. We have Astera Labs, we have Coherent, we have Lumentum Holdings, and there are a lot of names that we'll be looking for. It's a little bit hard to find the winner. So I think we're going to look to lower the position size in order to get a broader exposure for some of the themes that we find attractive, but where it's hard to find the winner. So so that's what we'll be looking for. And then, as you can see here, we're going to be looking to taking some profits in the high flyers that has become too big a weight in our portfolio. We don't want 5% in upstart for the foreseeable future, but I think it's just starting its journey. But we want to cut it to make sure we have a well diversified portfolio that can work in all environments. and then we're going to be looking for some smaller ads and to rebalance into some of the stocks that has had a hard time.
Yeah, but what you were talking about there were advanced packaging and 3D packaging, right?
Yeah, advanced packaging
Where
as well.
where
Yeah.
there's a whole bunch of like Taiwanese and even European players that probably are kind of no names people haven't heard about. So there's a lot of opportunity there to diversify in small companies. And
Yeah.
then you talk about accelerators and stuff for Broadcom. And we actually have a question asking if you could explain what's behind the big jump Friday for Broadcom stock.
Yeah, it's that that AI is just really moving faster, and they and their custom chips is also seems to be moving faster. Marvell came with their earnings the week before, and there were these signs that custom chips for big tech is really going to be a big thing, and that connectivity was also just firing, and then Broadcom came up and confirmed everything, confirmed the story. So we saw Broadcom rise 25% on the earnings, and we saw Marvell also. I think it was up 10% on that earnings. It was just like people were thinking, was this just Marvell, or was this really the sector? And but it's been the same. Astera Labs, I think they reported they're up like 30-40% since their earnings. And so it's the whole sector. It's just telling us that this story that we heard in the fall, that the AI businesses are not big enough to help data center demand, and people
Mm-hmm.
were worried about it. And we constantly said that it's not about AI, it's about accelerated compute. And companies, they're just saving money when they move workloads from traditional data centers to accelerated data centers, and so they get better performance and they save money. And that's why Jensen Huang calls it CEO math. The more you
Yeah.
buy, the more you save, and that's really the key. So and everything this earnings quarter has just confirmed it. So it's really going. Yeah, it's just a freight train that's up in good speed and just pounding away.
Yeah. So it seems like some of the
Anything else,
concerns have
Jesper, on
been
Broadcom?
no, not for now. Not anything really Civi related. Um, is there something else you want to raise a point about, or should I
No,
just?
no, no.
All right, we'll just
Yep.
jump into the questions we had. We received a lot of questions in advance this time. We also have a few left over from last time. So let's just get going. We have Brian asking if it's purely positive for tech stocks if the interest rates come down slowly over 2025. What's your take?
Yeah, I think the narrative is that it will be good for tech stocks. That's what people are looking for. So the price you can put on future the future earnings will be worth more if the risk-free alternative is not giving you so good a rate. And then the story has been that there's a lot of debt in tech stocks. I think it's from old days that growth stocks always had a lot of debt because they had to borrow money to buy new buildings and new plants and stuff. But tech companies, they actually have a lot of cash, so it doesn't really make sense. But nevertheless, it's been one of the stories that sort of has dragged tech stocks down.
Yeah,
That higher rates is not good for tech stocks. So I really think it's just a lot about what people think and how they feel. But anyways, when rates go down, the alternative to investing in stocks is going to be less attractive. So we're going to see flows into stocks maybe, and people are going to be looking for it. And then flows has been going into big tech a lot. So question is how much more that's going to go in there. It's a nice place if you're a big investor because you can easily pivot. There's volume enough. So I think people need to see the smaller tech stocks just continue to perform well before they're going to invest deeper into them.
Yeah, I agree that it's probably just positive. I mean, regardless of whether it's true or not, it is sort of the narrative of the market that tech companies are full of debt and risky and all this. And so when money gets cheaper, it's a positive sign. I will, however, point out that it's probably already baked into the prices because, for example, the Federal Reserve in America have already put out a pretty like extensive and clear path for what kind of interest rates lowerings we can expect for the next year. And so as soon as that is like announced to the world, it's going to be reflected in the prices. So we do know that like there's going to be around 4 bumps down over 2025.
Yeah,
I don't think
in
the market is
theory,
waiting for that.
you're correct, but I still think that people needs to see it happen.
Yeah,
A
for
lot
the
of the
news
times
cycle and for momentum and the sort of short term,
before we
it's
price
still
it
gonna
in.
be
Yeah.
still gonna be like a great headline here and there. All right, we have I guess in relation to this, Fleming asking that we often talk about Palantir and it's currently trading at a PE of 370. What's the motivation for paying such a high price? Is it a bubble or is it real value?
Yeah. So first of all, when PE goes above 30 or 40, then just stop thinking about it. Let's give an example. Let's say we have a company that has a revenue of 10 million, and it has 1 million on the bottom, and now it suddenly discovers it has a growth opportunity. So it hires 2 people, and now I'm talking Danish kroner, and they would get 400,000 kroner a year each. So suddenly the bottom line falls to 200,000. So PE goes from 10 to 50, and that's just because we're ramping up a little bit for growth. So once PE get high, it really is it fluctuates too much. So it doesn't make sense to think about it. Just think PE bottom line is around 0, and whether there's 100 kroner on the bottom line or 1 million kroner on bottom, it doesn't matter. But PE just moves a lot. So with Palantir, the question I guess is this how can it be valued like that? And the reason that it isn't as crazy as it seems is that if we look at their gross margin here, it has a gross margin of 80%. So let's say Palantir grows 30% next year. Gross margin is what you earn on the business you are doing, and then what comes in below gross margin is headquarters and interest payments, and depending on how you account for these stuff, but it's sort of the fixed cost of a business, especially a software business. You don't, if Palantir sells 30% more, it's not certain that they need to hire a single employee more. So when the profit on revenue is 80%, if Palantir grows, doubles their earning next year, it could have a giant impact on the PE next year. It's what's special here is the high gross margins, and it's extremely high, 80%, and they're a software business. So with software businesses, you should probably see them as businesses that has an upfront fixed cost, and that fixed cost is to make the product, and then it is also marketing costs to grow into sort of the TAM where you're at scale and where you have reached the size that you need, and they just have to fire away all that marketing cost. But now Palantir has gone to a place, if we look at cash from operations, we can see here that Palantir is very profitable now, and they're really just growing their income a lot now. So their growth now is just resulting in cash, and getting, yeah. So that's why you see a different picture. If you take a business like maybe Walmart or Maersk or something like that, you might have a gross profit margin of 20%. So if Palantir grows their revenue with 100 million, they might get somewhere around 60, 70 million on their bottom line. But if Maersk or Walmart grows their revenue 100 million, they will only have maybe 10 million on the bottom line for that. So the growth in Palantir is way more value creating than in many other business types. So it's really sort of the whole puzzle. How is what does the P&L look like, and how much flows through to the bottom?
I guess the easiest way to think about it is sort of the old way of thinking about software companies, where you sold software licenses, and it doesn't matter if you sell one or 100,000 or a million, the fixed costs are the same. Even in the old days, you had to distribute CDs and stuff. You don't even have to do that anymore. And obviously, Palantir isn't quite as easy as to just sell a license, but essentially they're just cloning the process that they already did for the prior customer.
And for big tech right now, actually the opposite is sort of the risk, that once they have to, like Microsoft, they're selling Office, and if they suddenly have to deliver an AI service into Office, that means that they'll have to deliver power, and they'll have some running costs on training and all that. So suddenly their gross margin on their Office might fall due to this, and that's one of the things that you need to be aware of with big tech, that their services, if they can't raise prices when the costs increase because of infusing AI into the products, then gross margins will fall. But Palantir just seems like a high gross margin product.
Yeah. And you mentioned marketing for Palantir earlier, and I mean, they're probably not even doing that much direct marketing. They have sort of made a name for themselves now. They've become a trusted partner of like the US state and pretty much all Western allies. However, Cristobal is pointing out in the chat that the problem is that they need consultants deployed right now in order to like operate and drive out their solutions, which I think is still true, but it's something that's been like a main challenge for the past maybe a year and a half for Palantir, and it's definitely something that they're working extremely hard on, sort of making the process more automated, and they've been going at that for a while now.
And that's what their US growth is sort of being seen as in the market, that they're solving the onboarding process and being able to scale that a bit more. And the wet dream for every Palantir investor is that it's going to be just an AI that just looks at the business and just onboards it, and so it's going to be plug and play. And if you ask yourself the question, do you think it'll be like that in 10 years, that you take your local bakery and you just put it on and make a digital twin from it and do all the stuff here? I think the answer would be yes. And then if you then ask yourself which company would probably be best positioned to do that, then it's Palantir. So it's really this pivot from them being a company a year ago that had to show that they are going to be able to grow efficiently without having to handhold every onboarding of a company and sort of hard code everything, and then to something that seems like it's going to be automated, and then the value is just immensely higher because you see a lot more growth and you see a market leader going forward.
Yeah,
And,
one of the
and
issues with Palantir is that they're also very often pretty secretive about what they do.
yeah,
That's sort of the nature of the business, working with governments and stuff like that. But I mean, at least we can see reflected sort of in their sales and the contracts that they've signed this year that they're taking on a lot more customers. So that probably is a telling sign that something they're doing about this onboarding process is working. But strictly
yeah.
speaking, Mess, would you say Palantir is expensive right now or not?
Yeah, it depends on on the growth, the longevity of the growth, and I think you can make scenarios where it's extremely cheap because you're going to have a lot of this high margin growth for a long time. So when yeah, but I think the longevity of the growth and the probability that they could be a market leader just increased a lot. So that's why I yeah, to me I thought it was too expensive at $20, but because the growth was not really there
Mm-hmm.
yet. But now I actually feel that it's a company that I need to be invested in because this could turn out to make sense. So I'm kind of more bullish here than
I
I
agree.
was at $20.
Yeah.
Um, yeah, so it seems crazy, but it's the reason is it's more about the tech and what we know about the tech, and maybe some people, like you said, Palantir, we don't know what they're doing, but so we need to see some companies adopt it, and we need to see the growth before we kind of can believe
Yeah. But
what they're
I
saying.
agree completely. Like I've known Palantir for a long time, and I've also held off from investing exactly because the business is difficult to understand, and it's such like a crazy thing to pull off. But now that they've signed up or signed on so many new customers, they're starting to build this credibility. And then obviously on top of the AI wave, sort of pushing everything in that direction, it's come immediately obvious that they're going to be an important player in the future. So it doesn't really matter if you're paying even 50 or 100% too much right now. I think it's probably worth starting a small position and just holding on for a long time.
Yeah.
Um, we actually had a question from Cristobal as well, asking what you think about Snowflake and Datadog. It seems like they haven't turned things around yet.
Yeah, that would be on the rest of our team, our SaaS guys.
Yeah.
Um, yeah, we took Snowflake in last quarter because we found that it was cheap, and I think for Datadog, wow, there's a lot of data that's going to be moved around, and wow, companies they need to have their data in a location where it can be used sort of all the time. And we have Confluent as well in the data movement space, and yeah, I think Confluent is a favorite of ours, and yeah, I think we'll definitely take some profit on Snowflake now that it's gone up. But
Mhm.
so I think those two will be our top picks there. But it's a little bit out of my where I feel I've
Yeah.
really got a good take.
Jordan actually made a pretty cool write-up on Snowflake just a few weeks ago, which is posted on the eToro wall for NDI-FutureTech. So if you're interested in that stock, go check that write-up out. It's pretty cool. It's talking about how they're handling data streaming and just some of the few issues that they're facing right now, but also the huge potential that is in the category they've chosen to sort of define now. So go have a look at that because it's definitely Jordan and Simon that are like the experts
Yeah,
in our team for that space. Um, we let's see here. We have a question asking where we see Unity being priced at the end of 2025.
Yeah.
Um,
Please, anybody that knows that, let us
yeah,
know.
yeah. I mean, we don't
uh,
we don't like to
wow.
discuss price
No.
targets, but that being said, I'm always looking for an excuse to talk about Unity, so fine by me. Um, I
Thanks,
s-
Jesper.
I still see Unity being in sort of a pocket right now of just having to do the grind of turning things back to normal, so to speak. I think the development we've seen ever since the new CEO joined around in the middle of the year has been super positive. And I think all the work that was laid after the old CEO was sort of kicked out, trimming the company, trimming different departments, and sort of streamlining the mission for the company has been really great. And the funny thing is that over the past couple of weeks, there's been this pretty huge sort of push in the stock, which has really gone unexplained. There hasn't been any news. There hasn't been any like things going on. We had an announcement a few days ago from Google that they're partnering up with Unity on their new like XR platform, which is sort of the equivalent of Vision OS from Apple with the Vision Pro. But other than that, there really hasn't been anything out of Unity. And so it's made me wonder if something is going on behind the scene, potentially that they've finally sort of gotten their ad algorithm to work again, which has been a huge issue and probably also the main reason for why they acquired Iron Source. It's made me worry that perhaps some other big company has been interested in acquiring the company since it's been trading at such horrendous levels with a market cap below 10 billion. So there's a lot of potential sort of reasons for why this stock could have gone up, but it hasn't really been explained yet. And I think we're on a slow grind right now. I think things will be better in 2025. I think the numbers will start ticking up, but I don't think we're going to see some huge explosion out of the blue unless they have fixed that AI ad algorithm and can finally start competing directly with AppLovin.
Jesper, what do you think about AppLovin there? Because AppLovin has really they've shown that you can really create a lot of value from in ads from
Mhm.
games. They sort of showed the way, and I think maybe you're from the gaming industry. That must make people a little bit sort of optimistic that finally a company figure out how
Yeah,
to monetize that ecosystem. And do you think that could spill over to Unity, that in the investor's eyes it increases the potential of Unity?
I think so. Yeah, and it's also funny that AppLovin keeps being mentioned on Unity earnings calls. Like it's been consistently over the past year that AppLovin has been brought up. The funny thing, or the good thing, as you say, is that they've proven the case now, at least on the ads side. But at the same time, it's also sort of a knife in the heart that this should have been Unity because Unity has way more data and have been around for way longer. So it's obviously also a very big sign that they have fumbled. But I mean, it's only good that the case has been proven by some other player. Obviously, it's not good that they didn't actually manage to do it themselves. I have some personal reservations about AppLovin. Not that I can prove it, but I'm a little bit worried that some of their numbers may be a little better than what the reality actually is. I've heard some chatter from the game dev community that people are getting absolutely insane, sort of almost unrealistic returns on investments when they use AppLovin for advertising, and that makes me skeptical, especially when it's sort of in combination with the fact that they won't talk about how the technology they've built works exactly like Palantir. And that's another reason for why I didn't invest in Palantir. It's a reason for why I'm not going to invest in AppLovin. So, I mean, I don't have any sort
Yeah.
of way
And I
of.
think another takeaway which could be really interesting is that when AppLovin is asked, or when they ask the CEO why they have the success, he says it's because we are founders. We have a founder, sort of a founder. We're a founder company. We have an environment that where people get things done. And actually, if you look over to Unity and see the management they've had for the past, I don't know how long he was there, the EA Games guy, but it looks a lot more corporate, and so yeah, maybe it makes sense.
Ricciardelli was sort of set on board to get Unity to go public. So he was hired as CEO a couple of years before the IPO to sort of make the company ready for going public. And he was definitely a corporate guy. There's no way around that. He wasn't one of the sort of passionate founders. Those are originally out of Denmark, and one of them is still on the board. The others are completely like non-associated with the company by now. So we had one of them being the CTO for quite a while, but things just sort of phased out. And for a while, Unity didn't even have a CTO officially, and then they found someone else. And yeah, it's been quite a mess with the management situation for Unity. We have a pretty cool question here, also from Fleming, asking or saying maybe that Danish companies aren't first movers on AI. What do you think will be the revolution in Danish companies? What will drive the adoption of AI? What do you think about that?
Yeah, I think that I think we're going to see a lot of use cases for AI coming up. A lot of them is just going to be more efficiency coming in, and so if you look at competitive advantages for businesses, some businesses have structural advantages where they have they have what we call moats, that things will be hard to entry, or something, if it can be size, or it can be various sort of structural things. And then below that, when companies then they also compete in just operational efficiency, whether you just operate your business good enough, and we see a lot of companies just pounding away, operating better all the time, and then they're taking market share and out competing their competitors, not because they have a different strategy, but just because they make the right decisions. And I personally think that a lot of that is luck as well, once you look into the math that's behind our portfolio. But I think AI will the adoption of AI in companies will be an operational advantage, that if you don't do it, like for businesses 20 years ago, if you didn't move to the internet and had a web page and had a web shop, then you would be left behind. And I think AI will be the same. It will just be that the companies that are good at adopting AI and creating efficiency, they will have higher margins, they will have better bottom lines, that will give them the opportunities to invest in more AI, or invest in developing new products, or whatever. So I just think it's going to be an operational game for a lot of the legacy companies. And then we investors are going to be looking for the new product lines that are coming up, the new businesses, but they're not so much in the new world. If you want to create growth, then you got to build something new. Like when Sony built the transistor radio, they enabled a lot of new people to have radios with them. Young people could have radios. So there were new factories, there were new product lines, there were new distribution lines and shops opening. That was growth in society. And how AI is going to create growth in society, that's probably not until we get robotics coming out, where there'll be production of physical stuff. So I think it'll just be efficiency, unless you're one of the companies delivering the software or the services,
Yeah.
and that's probably not going to be the EU. What's your take, Jesper? Do you have anything on Danish companies, maybe?
Yeah, I mean, I actually agree. I don't think we'll see sort of an AI company out of Denmark or EU for that sake. I just think there's way too much red tape and sort of negative connotations and obstructions for that to really happen. Perhaps within some specific niches, such as like education, where like the ethical or like the proper use of AI may be more important. There could be some sort of EU company sort of pioneering that. But what I think is that we'll just start seeing it appear in all the industries that we do well here in Denmark. So in particular, the life science industry. I think
Yeah,
accelerated
yeah,
compute AI is going to do a whole lot for sort of synthesizing and simulating data and with all the medical trials and drug discovery and development. And I think that's gonna that's gonna help and be part, like it's gonna be a necessary and very, very natural part of development going forward. So
yeah.
I don't think it's a coincidence that Novo Nordisk Fonden just unveiled a supercomputer, Gefion, in Denmark. I think they're on top of things and they see it coming and they're gonna adapt to it, just like you talk about.
I totally agree, Jesper. And actually, it's kind of the same effect as I was talking about, because that's going to be efficiency for a drug development company.
Yeah,
Um, sometimes today, or 5 years ago, when you thought of a molecule, we want to affect this receptor. It could lower blood pressure. These guys with a lot of experience, they would just look look at the molecule, and they would say, "I think this molecule is good. I don't think. No. We go with this one." But today you can do simulations. How are the molecules going to perform once they enter the bloodstream? Where are they going to be removed from the bloodstream? Is it on the liver, on the kidneys? And how are they going to distribute? If they are neuro medicine, do they pass the blood-brain barrier? Or so you're able to sort of remove all the stuff that probably won't work and focus more on the stuff that works. So it's going to be operational efficiency as well, for pharma companies.
yeah.
Yeah.
We had a question last time that we didn't get to from Kilo, asking if we knew anything about a company called Oxford Nanopore, and I don't think we do. It's not a company we're
No.
familiar with, but I think this thing applies to this company as well. They're working with DNA sequencing, and that's gonna get a boost from exactly those things that Mads just mentioned. Just the vast amounts of data that we can now actually analyze. It's gonna be like a pretty big catalyst, and there's so much data in DNA and DNA sequencing. So yeah, if you're looking for like the question was something about if whether this has the potential to change healthcare, and I think it's more the other way around, that AI and accelerated compute has the potential to change the way that sort of we innovate in the healthcare space.
Yeah, totally.
Yeah. Actually, now that we are in sort of healthcare territory, we have a question from Martin asking whether, let's see here, there's a coming FDA decision about the shortage of obesity medicine. How important is that going to be for Hims&Hers?
If we talk short-term share price, it's going to
Mm-hmm.
be extremely important. If we talk about where the company is 10 years from now, I don't think it's so important. I think the obesity market is sort of free marketing for Hims and Hers, and
Yeah.
it's also free dollars. Like if you don't pay for new customers, and you can earn money for it, so it'll be really good for Hims and Hers. But it's not vital for them. They were a really interesting business case before obesity medicine. I think I saw a tweet from Elon about how it would. I think the point was that it would increase efficiency for Americans if everybody could have obesity medicine. So when the politicians when they kind of if they say that this is critical for national something, then I think then I think the mousehole that Hims&Hers are trying to get through is that they have their own factory or they're collaborating with a factory that can produce the obesity medicine in a personalized doses. And they are going to push for that being a necessity. So the thing that will happen is that if you as a customer say, no, 2 milligrams, I really get these stomach cramps, I can't take it, and then you go down to 1 milligram, which is Novo Nordisk doses. I don't know what they are exactly. And then the person will say, no, I cannot control. I just get these eating impulses when I only get 1 milligram. And Hims&Hers will figure out, well, this person needs 1.63 milligrams. Then he has enough effect, and he doesn't get the side effects. So they will say that this person needs 1.63 milligrams. And then they'll produce it, because Novo or Eli doesn't produce personalized doses, and they will try to make that documented that's fair and that's okay. And if the government is sort of behind that in a way, then I think it increases the possibilities that it will happen. And I personally think they have a really good chance of getting through with this, but we're just going to be Hims&Hers investors for a very long time, because the investment thesis is the same. This is just going to be rocket fuel on it.
Yeah, I mean, like you say, obesity really isn't the core sort of long-term investment case for Hims&Hers. That's just a momentum wave that they can ride right now, and obviously investors should embrace that for the short term. But I agree with you, not that it's probably not all that important in the long term. At the same time, I mean, obesity drugs have been all the sort of rave for the past year or so, but we're also starting to see some pushback from it. I know Robert what's his name? Robert Kennedy Jr. is a bit of a skeptic on those kind of drugs and vaccines as well. So there's been talk about, or like we saw some of the stocks, like the fast food stocks, reacting negatively to people starting to use obesity drugs and stuff. So there's a whole lot of crazy noise about that I think as a long-term investor of Hims&Hers you shouldn't pay attention to. But there's always going to be things like that that are relevant and that will affect stocks like Hims.
Definitely.
Before you get the chance to elaborate a little bit on SpaceTech, which I think is what we should end the stream with, I have a fun question for you from Gustav from last time, who asked, how much of a hobby investor's portfolio should be allocated to being invested in NewDeal Invest?
I think it depends on the age. I can say that my kids only have a NewDeal Invest in their portfolio, and I also only have NewDeal Invest. Actually, I sold all of my individual stocks, and then I just have NewDeal Invest in my portfolio. I think that a lot of people would say, no, you can't have that much tech in your portfolio. That's just dumb and crazy. And that's because they think of tech as semiconductors and maybe as the informational index with the internet companies. But to us, tech is just a business that is solving an old problem in a new way. So we have Carvana, which is a used car dealer. Once you think about what makes them tech, it's like, oh, they have an app and they have a web page. It's e-commerce, but e-commerce is 20 years old. So what's techie about it? And then they use data. So they're a good optimized business with sort of what you can do technological wise. But what is tech about them is that they took the old value chain, which was inefficient, and they created a vertically integrated value chain within their own business. And that's what makes them tech. And HelloFresh Group is the same story. They sell food. It's not a tech company that way. So we have a very diversified portfolio with, but we have the newest companies with the latest tech in them, and then we have very broad portfolios. So I don't. Yeah, it's a good question. I think what I have to say is that you should only have maximum 10% in your portfolio, because that is, I think, what most people would say would be the correct answer.
Yeah.
But you should distinguish between having buying, just a bunch of we have the I said it. Yeah, that's it.
Yeah, we sometimes get questions about like why is this company in the fund when it's not a tech company, and the reality is that we think of tech as new innovative ways of problem solving or delivering solutions. So it doesn't really matter what field it is, and that also is a reason for why our portfolio is so broadly diversified. Like in my personal portfolio, I sort of split things into, I think, 7 different sort of sectors that I've come up with. And like, if those were all equally balanced, my sort of tech sector would be like, that could be NewDeal Invest, because it sort of, encompasses everything inside the tech sector. Let's end on the question from Anas, who asked you to elaborate on a comment you made in the podcast this week about space tech companies and some of them not being able to continue getting big orders.
Yeah, I think what these companies, they have very few customers right now. So if a small company has some big companies, that's a big concentration risk, and their early days, a lot of them has debt, and some of them are pre-revenue or only have started to have a little bit of revenue. So they're not very resilient companies. It's not like kind of a company where you're just certain that they're going to be here in 10 years. So what I wanted to emphasize is that you really need to be very cautious not to but put big parts of your portfolio in one of these companies. I think that would be a big mistake. But I also think that this sector it's so extremely well suited for what's happening to the world today. The computational leap that we are getting right now is just enabling so much intelligence and value to be gathered from space. Now, Jensen Huang said recently that accelerated. We used to rely on Moore's law to be able to do more with data, and then Moore's law sort of waned off, and we couldn't keep it up. But actually, compute has accelerated, because now we shift workloads from CPUs to accelerators. And he talks about a compute being sort of 1 million times faster over the last 10 years, because we moved to accelerated compute. And that means that you can take these large data sets from space, and you can actually create lots of value from them. And we're seeing that when you listen to these companies' earnings, they're getting a lot of backlog, they're getting a lot of interest, they're getting a lot of pilots from companies that are suddenly sort of being aware that now you can do this and that with data from space. Planet Labs just had their earnings and talked about new pilots and new sort of interest from a lot of customers. And they are taking photos. They're doing a daily scan of the Earth, and they store all that data. So if you suddenly get interested in what happened in Faroe Islands 1 year ago, from that date to that date, you can get the picture. You can get the pictures, and you can do the analysis. And beforehand, it would be an employee that was sitting and sorting these pictures and figuring out what's down there. But now you do it with AI. So it just gets so much cheaper to get the intelligence about what has happened via pictures. And then you have companies doing this via radio frequency monitoring of the Earth. So yeah, it's just data is just getting so much more valuable because of accelerated AI, accelerated compute. And then you have the law that the monitoring tools, or the tools that the sensors you put up there, they're getting more and more powerful, and you're starting to put more and more compute into the satellites as well. And now there's a lot of parts of the medicine industry, how things crystallize. There are some things you can only do in space because of zero gravity. Computers, there is stuff that you do better in space. So so we're just scratching the surface there, and it's really ramping. So I think it's so interesting, but it's really been on a tear recently. So what comes up fast can come down as well. Rockets for one thing, but also Rocket Labs, which has really, this is the SpaceX competitor. They look like this over the last here's a year chart. So things are really happening, but they have success with they might look like Palantir really, because they had a small rocket, and now they're getting ready to launch their bigger rocket, which can compete with SpaceX's bigger rockets. It's called Neutron, and they are getting a schedule for next year, and they'll be an alternative to SpaceX in the future. And it's just really interesting, but small positions, be diversified, and we'll definitely put some start taking some SpaceTech into our eToro portfolio now. And we'll do it just very, very cautiously, just to make sure that if we get a drawdown, we want to be really happy. So we just want to take a bite and then buy the dips actually over the next 10 years in that portfolio.
Yeah. At NewDeal Invest, we are really hugely bullish on SpaceTech. I just think that Mads's point boils down to that it's super new and it's super fractured, and there's a lot of risk. And so you should have a lot of small bets on a lot of players rather than having a big bet on one player. And yeah, we'll definitely be taking on some space tech companies in the NDI-FutureTech portfolio in the next quarterly rebalance. So if you want to be exposed to that, have a look at the link in the description and see what we'll pick up. I can just anecdotally share that I used to own a space tech company called Virgin Galactic by Richard Branson, which was quite a wild ride. And that company is not bankrupt, but it basically doesn't exist today. I got out of it fine, but it was literally like moving, the stock price was moving with their launches. So if a launch went well, it went boom, and if it didn't, it went bust. So yeah, there's a lot of risk in that space, ironically.
If you want to invest in space tech, there's the thing called space heritage, which all the companies talk about. It's really necessary that you have a company that has shown that they can launch and they can have things operating in space, and that they have experience with that. And it sounds like Virgin Galactic never really entirely got there. But yeah,
Yeah, I think they got like pre-orbitable, so they didn't even really break the barrier to the real space. It was
no.
more or less airplanes that they had with some some boosters on it.
But
Uh,
you were a visionary. It was a good pick, actually. It was just sort
uh,
of the wrong horse.
I mean, I picked it up at a good price. It exploded. I think maybe I picked it up at $30 and it exploded to $60, and then something went wrong with one of their launches, or like it got delayed, and then it went all the way down to like nothing again. And then we waited for it to go up again, and it did, and it peaked again, and then it completely busted again, and it's never recovered from like the last time. So yeah, dangerous place to be in. At least if you want to fully expose yourself to that, there's quite a few things you need to keep an eye on and follow pretty closely. Uh, Finally, I just want to end on that I think I promoted it last time as well, but Mads actually did an exclusive interview with the CEO of what's the name? Global
Spire Global.
Spire Global, which is really cool. It's here on our YouTube channel. Those are one of the players that we're considering adding to the portfolio. So definitely check that interview out. It explains a lot about the different sort of satellites and stuff that exist in space. So if it's an area of investment that you're interested in as well, check out that interview. Otherwise, I think it's time for us to sign off. So thanks for all the questions, everyone. Thanks for listening and watching. We'll see you. I'll catch you all next year sometime. And
Yeah.
yeah, have a great holiday and Christmas.
Yeah. Thanks, Jesper. Thanks all for listening. Bye.
Bye.